Absolute disaster out there in the market today, considering everything that's going on. I mean, just take a look at what's happening. Prices are down across the board, and also we have the balancer hack that went on, and it took a lot of casualties with it. And there is a liquidity crisis going on that the Fed may have to step in and fix, or they may continue to ignore for a pretty long time. What does all this mean? What happens next? Is Q4 doomed, or is it ever going to come back before the end of the year? Or do we have to wait until the middle of next year for things to start going good? All this and more on today's program. I'm Cairo Copeland, and this is Reinvent Ideal. Good afternoon, Hexaco. We need to have a very difficult conversation about what's happening in the market right now, but first, what I want to tell you all is how much effort I'm putting into this here for you. All right, I take a tremendous amount of responsibility and a tremendous amount of prudence in all the research that I do and share with you because it's incredible to me that I was right this whole time about Q4 being an absolute disaster. I've been saying that ever since September. I said, hey, we got a difficult Q4 ahead of us. It amazes me that I was right. Not to say that like I doubt myself or anything, but like to be this right, this uh, this right, this accurately, that took me a little bit by surprise, especially with what I'm seeing going on in the market today. And we'll talk all about that. Also, Balancer experienced an enormous disaster today, and that's had catastrophic effects on some of the chains out there. Some of the ones that were trying to be like the DeFi narrative, they took a great big hit. Now, I'm not going to keep everybody waiting and tell you what I think is going to happen, because I still hold to the original thesis that I've held to this whole time. That what's going to happen is we have a horrible Q4. We have a very rough Q1 in 2026. Q2, probably rough as well. And then, maybe, things turn around in Q3 of 2026. I know that sucks to hear that. Because it's like, well, then it's like the 4-year cycle was right all along. Because the first half of the year was our bear market. So I know it sucks to hear this. And I don't like take any joy in reporting this, even if I'm being proven right. I don't take any joy when I'm proven right about a bad prediction. But what we got to consider here is what are the forces that are going good for us, and what are the forces that are going bad for us, and what is the likely outcome of those forces as they meet in the middle. All right, so thesis doesn't change. Q4 sucks, Q1 sucks. I can't really see past that. I would like to believe that by Q3 of next year, things start going good. That depends on a lot of things. I'm not bearish. I'm not bearish or anything. But I got to tell everybody here, if you can't handle it getting uglier, maybe you should get out now, because it is going to get uglier. And I'll show you exactly the reason why, but let's take a look at how bad the market's been hit. So let's go over to sharing this window. I'll come back to this chart later because this is something very interesting. Let's refresh. What's the market doing? All right. So it recovered some of its horrific drop. It went all the way down to 105, which is like key resistance for Bitcoin. Not a big technical analysis fan, but I do believe in those 200-day EMAs, the moving averages. You don't want to fall below them. And you see now it's flirting with it. Ethereum, what an absolute piece of garbage. Down to 3,600. It's amazing that it's even hanging on to that. XRP is kind of holding up okay. Solana, oof. They getting kicked in the teeth there. And we take a look at some of these other ones like Cardano, Hyperliquid. Like everything that it ever gained, it immediately lost. Here's an interesting standout, though, is ICP, Internet Computer. Like, what? Why are you popping right now? I mean, it's down from like where it was. This thing was not too long ago, all the way up to $4.50, just earlier in the month. But like, why did it pop off from 293 up to 388? What's going on there? It's having a little bit of a run, as you can see on the week. What in the heck is going on? That makes no sense. Because this is a project that has just been kicked in the teeth ever since it was released. I mean, look at this chart. A lot of people like to crap all over the hex chart, but look at this guy. This thing had been real high on its launch, and it's done nothing but gone down ever since. Absolute down. Like on a wick, it went all the way up to like $750. So it's down more than 99%. Like most of crypto, by the way. They like to say that about Hex. Oh, it's down 99%. So is most of crypto, people. And even coins in the top 100 are not immune to that. Now, I think that like a lot of the negativity around it is just due to this. The fact that it's a supply, the maximum supply is infinite. And then also, we do believe that like Alameda, when they were around, they were really kicking ICP in the balls all the way down and treating it harshly or treating it unfairly. But it's amazing that it had a little bit of a pop. I wonder why. Nobody seems to know. Even stuff that is really good and has a lot going for it is getting kicked in the teeth right now. Kronos, they have a bright future ahead of them because Trump is going to invest more money into it. They got kicked in the balls. Athena has a lot going for it. They're getting kicked in the balls. I mean, what everybody's saying right now is, oh, most of the altcoins are not going to do well, except the ones that have actual cash flow. That's what I keep hearing. It's like, it's all about cash flow now, huh? Well, Athena has cash flow. So does Hyperliquid. So does EtherFi. And they're all still getting kicked right between the legs. So it's not helping them right now. Now, here's what's interesting to me, though, is how well the official Trump meme coin is holding up. I mean, yeah, it's down 90% from where it launched at. But on the week, it's only down 5% when everything else is really getting a baseball bat taken right to its face. What is going on here with the Trump token? Man, a lot of these guys are just being beaten down real bad. And I know what some people might be thinking is, well, do I buy here then? Is this a good time to buy? I'm going to say hold that thought for a moment. This one pains me to show. Sonic. The balancer hacker did a lot on Sonic today, did quite a job on it. And this thing is down to 12 cents. Not the lowest it's ever been. It actually got down to 11 cents. And there's talk that it could go to 10. Maybe it holds support there, or maybe it falls below 10. I don't know where it goes, but I do know where the bleeding stops and starts. I do know where it starts, or where it will stop. If it's going to reverse any, I can tell you where I think it will reverse. This goes to show like the importance of we got to take profits when we have them. Because earlier in the year, this thing was up at 85 cents. Now it's really kicked in the teeth down in the dirt with the dogs. What about the RH ecosystem? Well, it's no exception to the brutality that's gone on today. Although it could be a whole lot worse. Let's refresh, make sure we got the latest up-to-date data. Yeah, it's not good, but it's not as horrible as it could have been. And that's just what you got to do is just really got to hand it to a community that really believes in these coins and are keeping those coins up. Because they're not capitulating like everybody else is capitulating. So many other communities are totally capitulating and falling apart. Like, looks like that could be the case for Sonic. I hope not, but it could be. What about the news? Oh, hey, what do we got here? We got some breaking news here. Fed Governor Lisa Cook, in first policy speech since Trump suit, says she's undecided on December rate cut. Well, of course. Look at that face. Does this look like someone that is a happy, nice person? Do you think that this is like somebody you'd want to hang out with? It looks like such an angry public school teacher face. I gotta say something about this here. Like, I've kind of kept this in, but man, I'm gonna like really let it out right now. I mean, I know that this is not like the direction of the show here and everything, but what I gotta say is I have nothing but absolute hatred and complete disdain and the highest level of misanthropy for public school teachers, really teachers in general, because I went to public school and I went to some private schools, and every single school I ever went to, the teachers were complete douchebags and bitches. Try not to, I gotta keep it clean. I'm sorry, guys. Yeah, I have never experienced a good teacher. They were all complete jerks that looked like they hated their jobs, hated life. That's what Lisa Cook looks like. She looks like a teacher in a public school that hates her life. And I have zero respect for all teachers. I'm sorry if you're watching and you're a teacher, but you guys got to know the deal on a lot of this here. You guys got to know like why teachers are so hated. What ticks me off the most about it is how they think so highly of themselves. Like they're these noble people. Deep down, they should know every single kid in their class hates them. Anyways, let's read this here. Federal Reserve Governor Lisa Cook, in her first policy speech since President Donald Trump tried to remove her from office, said Monday that she supported the recent interest rate reduction and indicated she would be open to more. Since Trump made his move in August to sack Cook on accusations of mortgage fraud, she has kept relatively low profile outside of court battles. Ma'am, the lawyers are advising her not to talk, and it looks like she's obeying them. In remarks before the Brookings Institute in Washington, D.C., the policymaker laid out her views on the economy and where she thinks monetary policy should land. Generally, she sees the economy as solid. Oh, okay. See, this is why we need this woman out of here. You think the economy is solid with all of the crap that we've been seeing lately. Man, we got some new stuff to show you guys here. It shows we are, in fact, in a recession. And she thinks that the economy is solid. Honey, you got to go. You're not fit for the job that you're doing. You're not all there. You're not doing it correctly. You are a danger to the country if you think the economy is solid right now. Same with Jerome Powell. He is a danger to the country if he thinks everything is just so okay and rosy right now. If he doesn't think that this economy is in serious trouble, you shouldn't be sitting where you're sitting then. You need to get the holy heck off of the board. All right. She sided with the 10-2 vote on the Federal Open Market Committee to lower the central bank's benchmark interest rate by a quarter. Viewed the decision as appropriate because I believe that the downside risks to employment are greater than the upside risks to inflation. Right. And I view the latest reduction in the Fed funds rate as another gradual step toward normalization. As the path going forward, Cook says she's sticking with a data-dependent position. Oh, cut the crap. FOMC officials in September indicated an additional cut is likely before the end of the year. As always, I determine my monetary policy stance each meeting based on incoming data from a wide variety of sources. Yeah, well, then why are you all complaining about the government shutdown affecting your ability to get data? Every meeting, including December's, is a live meeting. Okay, I thought it was dead. Fed Chair Jerome Powell rattled markets with his Wednesday post-meeting news conference when he said a December cut is not a sure thing. Yeah, guys, I gotta tell you, man, I don't know if that really is the thing that sent markets crashing. Because I think every market participant should know is, hey, what the Fed says months ago may change. What they say in the September press conference may not hold come December. The situation can always change. If you don't know that, and if you don't recognize that, if you're not prepared for it, well, then you deserve to lose. So I don't think that it's a matter of he said this and that's why everything is going down. No. There's a little more to the story than that. On inflation, she said Trump's tariffs have not fully made their way through the economy. However, she said most likely the outcome is a one-time increase in prices, not likely to fuel inflation over the long term. That's the rest of the story. Okay. So that was some breaking news that was worth looking at. What's the rest of it? Oh, yeah, market keeps pushing up higher. Amazon and Microsoft keep having like these outages. Their products are getting worse. They're sucking, but somehow their stocks keep going up. What in the heck is going on? Well, I can explain it. I can tell you exactly why it is. It's all about the passive bid. If you haven't heard of the passive bid, it just means that, it's what I've been saying about these 401k and 403b remittances that come in every week. When that money comes in, and because everybody's lazy and wants to be an index fund investor, the money goes into the index funds, and the index funds have to they have to put the most money at the largest stock with the largest market cap. So it's just a self-reinforcing thing. Like once you get into the top 10 of the S&P 500, your company's stock is pretty much set, barring like any major scandal or anything, because it's just a self-reinforcing mechanism where you're one of the biggest companies, so you're going to get the most dollars from each of the cash flows that come in from remittances. And it takes something very powerful to knock that off its course. Any other important stories? Doesn't really seem like anything related to us here. Measure is showing breadth at its lowest. Yeah, that's something related here. Is like with the stock market, the overwhelming majority of stocks are not doing well. The overwhelming majority of stocks are actually in a bear market. Talk about that a little bit later. Here's something to be unhappy about. DXY is climbing. It is almost at a full 100 when it's at 99.87, so close to 100. And now that means that like the dollar has all of the strength that it had lost. And like it's still down on the year though, because like it was up to 110. We really don't want it to go back up to 110 again there. If it goes back up to 110, we got a serious problem, because then it means it gained back all of the strength that it lost. We don't want a strong dollar. And we know that Trump and Bessent do not want a strong dollar either. But it looks like it's happening either way, because China continues to weaken their currency. And then Japan will also be weakening theirs. And with the ECB in the Eurozone, it looks like they could be weakening theirs as well. Now, long term, this doesn't last very long. It doesn't last much more than maybe another year at the absolute most. I don't think it would last a whole year. But when those other currencies weaken, that now gives us the ability to weaken ours without any undesired consequences. So that could be what happens here with this. Is like, well, we're kind of winding the coil before letting the spring spread out. More bad news. Interest rates are rising on the yield curve here, specifically the 10-year Treasury. Now, this is not all bad news here. I mean, it kind of need to have this happen a little bit, because we want that 10-year Treasury yield to be higher than the federal funds rate. We absolutely do want that. And right now, we do got that. Let's check this out here. I don't know if you can see it, but there is now a positive spread between the 10-year Treasury and the federal funds rate. That's good. We want 10-year Treasury to be higher than Fed funds, but really we want that Fed funds to go lower. We want it to go much lower here. And the reason why is this. Is when you take a look at this setup right here, the gold line, that is the 10-year Treasury. The red line is the 2-year Treasury. Well, that's good in the sense that, like, there should be a spread between the 10 and the 2-year. The 2 should absolutely be lower than the 10-year. That makes sense. I mean, it should cost you more to borrow money for 10 years than it does for 2 years. But the green is the 3-month Treasury yield, and it's right in the middle of the two, and that makes no sense. If you're only borrowing money for 3 months, it shouldn't cost you more than it costs for 2 years. And the reason for that, though, is that the 3-month, it kind of hugs the federal funds rate, which is the blue line that's kind of flat throughout all here. See how it's flat and then it comes down? That was the last cut from the September Fed meeting. And then it falls down here again. That was the cut from the meeting a few days ago. So here's what we really want. We want this green one to be down below the red. We want the blue down below the green. And then you want the gold on top, ahead of everything, above everything, because then the world makes sense. Then the risk curve makes sense. And then we can start expecting better returns in risk assets. Because right now, what this shows you here is that the world just doesn't make any sense. And a lot of capital allocators are afraid to take any risks. It's exactly what happens when you got it all mixed up here like this. All right, I see a bunch of you here are in. Go ahead and get your questions in right now. Don't worry, I promise I will answer them before the end of the stream. All right. Now, why is crypto sucking right now? Gotta admit, it really is sucking. It's sucking bad. This is the reason why. Fed net liquidity. I don't know why none of the other streamers are talking about this. I don't know why they don't know that this is the reason. Makes zero sense to me that like they're getting on stream here just about every day talking about stuff, and they never mention this here, Fed net liquidity. If this trend does not reverse, we're cooked. We are cooked. Why is this trend being so, why is it going down? Because the government is shut down. So the Treasury General account is building back up. Now, why does that matter? Well, I'll tell you why. Is because the Treasury General account is one of very few savings accounts where when the money is stuffed in it, that money does not get invested in anything. That money is basically just as worthless as cash stuffed in a coffee can and buried in the backyard. They don't invest the Treasury General account in anything. That's money that is like taxes paid or tariffs collected, and it's just stuck into a savings account at the Federal Reserve. And while the government is shut down, they keep collecting, they keep building it up, but they don't spend it. So that money, it's $1 trillion now, that's sitting there, should be circulating throughout the economy. But it's not. It's just sitting in a savings account doing nothing. That's hurting liquidity all over the place. And if it stays shut down for too long, it could be the end of the liquidity cycle, and it could be the end of our cycle. So here's the thing. The lower this goes, the longer it's going to take to rebuild it back up. And with how long it could take, it could be by the time the next cycle is supposed to start. So I'm not trying to sound bearish here or anything, but I want to tell you the truth as I know it. And this is something that I got to come clean and tell you. Like, this is why crypto is sucking right now. And if this doesn't reverse, it's going to get uglier. Now, here's what I think happens. I do think that this reverses. I think the government shutdown ends sometime this week. Because here's what I think was going on with it. The Democrats just want this shutdown to continue past Tuesday because they think it's good for them politically. And there's some governor races that are going on Tuesday. So they want to keep the shutdown happening until Tuesday so they can hopefully win those races, as they see. I'm trying not to get political here, but I think it's pretty clear to you guys I hate the Democrats with all my heart. But they're trying to keep the government shut down until at least Wednesday. So at some point this week, I do think that the shutdown ends. Then the TGA can get spent. And that's going to help. But it is going to take a long time to recover from this because Fed net liquidity went from over 6.2 trillion down to 5.5 trillion. That is a dramatic jump. I think it could take a whole quarter to get that reversed and built back up. Yeah, check this out here. Here's another reason why it's sucking. This is the Fed's balance sheet that's just been updated to include last week. It started out at 6.589 trillion. Now it's down an additional $2 billion. They did $2 billion worth of quantitative tightening. I don't know why they think that they can safely do this here. Do they not see the stress that it's causing in the short-term lending markets? I mean, that's what is going on here. That's what this chart shows you is the spread between the SOFR rate and the IORB. What those are is that's secured overnight financing rate minus the interest on reserve balances. And the problem isn't just the spikes and how high they go, but how frequently it's been spiking up. When this is spiking up here and there's a positive spread between the two, this means that banks are borrowing more desperately. And that means, like, why are they borrowing? Well, they're borrowing because they've got to fund withdrawals, or they've got to fund margin calls, or maybe they have to roll over some assets on their balance sheet. This is a problem, though, because if there's a run on any of these banks, then stress like this could cause them it could cause them to fail. I mean, there's no getting around it right here. We're looking at not necessarily the same thing as what happened with Silicon Valley Bank, but you are looking at something similar with that kind of stress. Now, that kind of stress, is that good? Is that bad? I mean, we hesitate to say that anything is good, but what I do think is the one positive ray of light in all of that is if we do have some bank failures, that may force the Fed into an emergency meeting where they got to take drastic measures. Do they do that? I don't know. Because here's the deal. Is like when I look at Jerome Powell and how clueless he is, when I look at Lisa Cook and how stubborn she's being, when I look at some of the other governors on the board, I don't have a lot of hope that they would do the right thing. And that's what we want to talk about here today is like, what happens from here? Like, where could it go really good? Where could it go really bad? I got to tell y'all, though, Q4, I don't see any salvation coming here in Q4 unless something big really breaks in the economy and it forces the Fed into an emergency meeting where they got to take drastic actions. Other than that, I do not see anything good happening in Q4, and it's going to get a whole lot worse than it is now for Q4. So if you can't handle it, if you can't handle seeing prices lower than they are now, this just isn't for you. All right? Not telling you to sell, not telling you to do anything at all, but I'm telling you, you will see prices lower than they are right now because Q4 is really going to suck. Yeah. Do I have a message for everybody throughout Q4? Yeah, a message that I wish you all would have adhered to today. Margaret, will you tell us?
Control yourself!
Thank you, Margaret. So, you guys got to know, it will get worse. It will get worse. And Q4 is pretty much done. All right. Sucktober just ended. Next up is Lovember, or Blowvember. And then we got Deadcember. And then we have Scamuary, or Shamuary. And February, I can't say what it is here because it involves a cuss word. But this is the worst that is ahead of us. The good news is that it's up next. So once we get it behind us, it will be behind us, the absolute worst, I think. I think the absolute worst will be behind us when Q4 is over. We might have some more pain in Q1, or I think we will have some more pain in Q1, but like as much negativity as there possibly can be will be over with once Q1 is over. And the reason I say it is just that you got tax season in Q1, and a lot of people will be selling crypto to realize profits in a new tax year. And they're going to be doing that all throughout the quarter in accordance with their tax planning. That's how I see it happening. Now, got to talk about like, well, what about after? What about all of that? What happens after all of this here? Then, like, once Q4 is done, all eyes are going to be on one Supreme Court case, which is going to be in January of 2026. I forget exactly the day. It might be January the 5th, I think. But that's where Trump is trying to get Lisa Cook off the board. He wants control of the federal board of governors as quickly as he can, because the sooner you can get somebody, the sooner you can get your 4-vote majority on that board of governors, the better. You definitely want it before February, because come February, what's going to happen is several Fed presidents that sit on the FOMC will be up for re-election, or there'll be elections for them. And the governors are the ones that make that decision of which presidents are going to sit on the FOMC, bank presidents. Got to get Lisa Cook out of there. And it's really up in the air to me how the Supreme Court is going to rule on that. I wish I could tell you, like, hey, it's a chance that they'll throw her out. But it's up in the air to me here, because when I look at like all of the legal opinions I can find on it and the Supreme Court's ruling patterns, here's what I find is like there is a conservative tilt toward expanding executive authority, meaning the president's power. There was Sela Law LLC versus the CFPB board. That's the Consumer Financial Protection Bureau. There was also a case with Collins versus Yellen, and there was a 5-4 majority struck down for cause protections for single director agencies, the head of agency. And that was in the CFPB and the FHFA. And they were deemed as unconstitutional limits on Article 2 powers. So previously, when the president wanted to get rid of the head of a department or a head of a agency, a federal agency, the Supreme Court sided with him on the ability to do that. However, when it came to distinguished multi-member commissions like the Fed or the FTC, we don't have a very clear ruling on that. All right. Now, there is a case called Humphrey's Executor versus the United States that happened all the way back in 1935, and that unanimously upheld for-cause removals for multi-member independent agencies to insulate them from politics. But the court has chipped away at that kind of independence. And the case of Trump versus Wilcox and some other FTC-related disputes, it allowed at-will removals without cause for certain agency heads and granted review on potentially overruling Humphreys for the FTC. And that does signal broader erosion of protections. Now, what we think will happen is Justices Thomas, Sammy Alito, and Neil Gorsuch, they will probably rule on the side of the president, because for the most part, they have consistently advocated for maximal executive removal power, which is great. I like that. I mean, I voted for Trump, so I'm voting for the Trump agenda. I want that agenda done how he sees fit. Chief Justice Roberts is one you got to watch out for, because this schmuck, he has an identity crisis going on. He can't decide as he drifts back and forth. Am I with Thomas or am I with Kagan? Am I with Gorsuch or am I with Sotomayor? He seems to suffer from an identity crisis. He seems to forget all the times that we've backed him up, or that the conservative justices have backed him up when he needed the support pretty bad. But he drifts back and forth. You may remember back in 2012, he was the deciding vote on whether Obamacare was ruled constitutional or not. He ruled on the side of the Democrats in that one. Completely unexplained, especially when you listen to how he talked throughout the entire oral arguments and everything. He was questioning the Obama lawyers. He was really giving them a hard time. He was talking like the Obama lawyers were just a bunch of ridiculous idiots. But then he shocked the whole world when he came out and voted on the side of it. So what else he's shown is institutional caution, authoring opinions that carve out exceptions for economically sensitive bodies. We can't rely on Roberts to do the right thing. Kavanaugh and Barrett, they're both Trump appointees, and they have aligned with expanding presidential authority. But they've also joined Roberts in many cases of limiting the scope. Now, the other justices, there's 3 of them that suck: Sotomayor, Kagan, and Jackson. We can 100% rely on them to do the wrong thing and vote against removing Lisa Cook. Can 100% or rule against. It's not voting, it's ruling against. We can 100% rely on them to do the wrong thing. So, some outcomes that could occur here is that it could be a 6-3 decision in favor of Cook or a 5-4 decision in favor of Cook. And it would affirm the lower court's injunctions and invalidate the removal. And then she's stuck on the board. We can't get rid of her. That will be very bearish for Q1 of next year. Because since Trump had to get into it himself, he had to personally involve himself in this, which I wish he hadn't done. It is war now between them, and you just don't want a war, a power struggle between the Federal Reserve and the president. It doesn't end well. It doesn't end well. You don't want to make enemies of the Federal Reserve, even though they are being jerks. We're not happy with them. You don't want to make enemies of them. You don't want to be talking trash about them all the time. So this could represent a problem here for us. Because now, what we're waiting for then, if she stays on the board, what we're waiting for then is for Jerome Powell's term as a Federal Reserve Board chairman, for his chairmanship to end. That term will end in May of 2026. But we're not just waiting for that. We're also going to be hoping that he steps down as governor as well. And we don't know how that's going to play out. We don't know if he'll step down as governor. Because he has a real enemy in Trump. Maybe he wants to stay on as a governor just to be a thorn in Trump's side. I sure hope not. I sure hope not. I mean, maybe that's why there's so much tension between Trump and Powell right now, because Trump is trying to make his life a living hell so that when Powell's chairmanship ends, he's going to be like, yeah, I want to step down as governor too. I really hate this job. It sucks. And maybe that's the 3D chess that's being played here. I don't know. But what I do know is there's one risk that could happen here, and that's that the other Fed governors and presidents, they really do not like the idea of the illusion of Federal Reserve independence being shattered. They do not like that at all. So when they see Trump trying to put his people on there, and he fails to get Lisa Cook out, Jerome Powell does not resign from as a governor as well, what they could do, just to stick it to Trump, is they actually could re-elect Jerome Powell as Fed chairman of the FOMC. And that would be absolutely catastrophic for crypto and for all markets, really. I mean, it would put the stock market into a bear market as well. Now, do I think that they would do that? No, I hope not. I don't know how they all think, but I think they would also realize what a horrific negative effect that would have on the country, especially just power struggles in general between the Fed and the president. But I also think that they're petty, and I think they're egotistical, and their ego matters to them a lot more than doing the right thing. In that case, if that happened, what we're waiting for then is something we don't want to wait for, which is an absolute disaster to occur in the economy. Absolute disaster that forces them into an emergency meeting where they have to take rates down to zero and they have to turn on the money printer. Now, let's talk about the good side of what could happen here. Is it possible that the court does not believe the Federal Reserve should be independent? Because that sounds a lot like a fourth branch of government. And the Constitution doesn't say anything at all about a fourth branch of government or an independent Fed. So is it possible that they rule in favor of Trump for that reason?
A legitimate question, young man, deserving a legitimate answer. Now then.
Yes. Yes, it is entirely possible, because some of the Supreme Court justices have expressed views that align with that idea, that the court could question or limit the Federal Reserve's independence on constitutional grounds, and viewing it as an unaccountable fourth branch of government, not explicitly authorized by the Constitution. Because you see, Constitution only gives you 3 branches of government: executive, legislative, and judicial. It says nothing about a Federal Reserve, nothing about other independent agencies, especially ones that were created by statute. We had the Federal Reserve Act of 1913 that created the Federal Reserve. And it was done by Woodrow Wilson, who was actually the absolute worst president in American history. Like, you want to talk about bad presidents, the absolute worst president in American history is Woodrow Wilson. He deserves zero respect. You should spit on his grave anytime you see it. It's in the National Cathedral in Washington. Very bad guy. Very bad guy. Now, the originalist scholars and the conservative justices, they would argue that independence at the Federal Reserve would dilute Article 2's executive power for the president. And it kind of creates a headless fourth branch that evades democratic accountability, and it protects the officials within it from checks and balances like at-will removal. And that's where we go back to cases like the Sela Law LLC versus the CFPB and the Collins versus Yellen case that occurred in 2021. And the conservative majority struck down removal protections for single director agencies like CFPB and the FHFA, Federal Housing Ministry. Or is that what it is? I think actually FHAA is something else, right? What is it? FHFA, Federal Housing Finance Agency. Okay, good. It's the same thing. And it basically said that they were unconstitutional limits on presidential authority. We can rely on Thomas, Alito, and Gorsuch to kind of rule the same way here as they did there. And they have all called for revisiting the Humphreys executor versus the United States from 1935, which is a ruling that gives independence to other agencies within the government. And 2025, this year, we had Trump versus Wilcox, where the court expanded presidential removal powers for certain agency officials. But it also did carve out that the Fed was a unique situation, which suggests that they're reluctant to apply the same logic there. But the distinction could be seen as the court kind of like picking and choosing which agencies deserve independence, potentially opening the door for future challenges. Now, the full court has not gone so far as to declare the Fed's independence unconstitutional yet. And precedents like the Humphreys decision kind of remains in place. And even while we got a conservative majority on the Supreme Court, they have distinguished the Fed due to its like quasi-private nature and its long history and its critical role in economic stability. They have kind of like suggested an exception to it, because like they say, well, factors like that make outright dismantling risky. It could have long-term economic problems. So the Trump v. Cook case, which starts in January, the justices deferred Trump's request to remove Governor Cook, and they have allowed her to stay so far, signaling that they may uphold the Fed's for-cause protections, meaning she can't be removed, rather than erode them further. And then there's also a big, long list of amicus briefs from Fed officials, from economists, states, Treasury secretaries, former Treasury secretaries that are defending. They're coming out and saying, well, we side with an independent Fed, but it needs to be independent. So the fourth branch argument, that does resonate with the court's conservative wing, and it could influence a ruling against full Fed independence in theory. But the justices' recent actions and distinctions suggest they're more likely to preserve it for practical reasons, at least in the near term. A complete rejection of that, though, would be a great big departure from how they've ruled previously. So I don't know what's going to happen. I really don't. And to get on here and say, oh, yeah, they are going to remove Cook, or no, she's going to stay on, would be very irresponsible of me. What I do gotta say is it's crucial that she's gone. I hope that they're digging up other dirt on her and sending like new, not threats, but like new warnings to her. Like, hey, we found this dirt on you, and we're going to have the Justice Department bring you up on charges, and we've got a 95% conviction rate. Don't screw with us. Get out. I hope they're doing that, but I don't know because I'm not in the government. I don't have access to classified information, and we should be prepared for the worst case scenario either way. The worst case scenario is we don't get her off. And if we don't get her off, well, we're going to be relying on a lot less likely things to occur, or a lot more traumatic things too, to get the money printer turned back on. Be relying on an emergency going on in the economy, which could happen. I mean, you seen the economy lately? It sucks. So it just takes something like a bank failure to get them to turn on something like the Bank Term Funding Program or QE. It doesn't take that much to get them in an emergency meeting. Lynn Alden had written something about this right here. What's happening now is just like what happened in 2019 when we're talking about the repo crisis that's going on. Now, repos are pretty messy right here. We don't want to get like too deep down into the weeds here and everything, but we got a widening fiscal deficit just like we had in 2019, which is causing a large supply of U.S. Treasuries to be at an unprecedented percent of GDP, which it's unprecedented outside of any type of war. Like, it's okay if it happens during war because then everybody understands the market behaves accordingly. But in peacetime, it's not that great. People are questioning, what's going on? You guys can't manage your finances? So what happened here was like foreign sources and the Federal Reserve were not buying U.S. Treasuries, which is what's happening right now here too. This one here, it went on for 5 years where the foreigners were not buying U.S. Treasuries. The Federal Reserve was not buying them. Now what we got is probably about 2 years of that, which could be just as traumatic right here. So private domestic balance sheets were the ones that stepped up and started buying those treasuries. That led to a problem. The 12% annual growth of domestic treasuries versus a 4.1 annual nominal GDP growth over the past 5 years. What's our GDP growth now? It's less than 4%. It's more like, at best, the best year we have, or the best quarter we had was 3.8%. Really, I think the GDP growth rate that we've been having, the real one, is not good at all. It's like 1%, if anything. So when you have that, that's just not sustainable in the long run. Biggest treasury buyer was what's called the other holders category on this chart here, other investors. That's how it was back in 2019. That's kind of what it is right now as well. And they have a limited supply of money to buy with, as opposed to central banks, which can print money. And we take a look at this here. What this shows us is that there was a tax cut that went live in 2018, and that caused some cash repatriation for the S&P 500, meaning money was coming back into the country, which paid for a lot of buybacks and T-bills. The T-bill levels, cash levels, and the balance sheets for a lot of companies went up. But then in 2019, there was a drawdown for more buybacks without repatriation to replenish it. Buyback season's about to start here, guys. The blackout period for buybacks in the stock market is about to end. Could be seeing the same thing going on here. Proximate timing issues on top of rather saturated domestic balance sheets. That's true right now. What's the result? The result is this here. If corporates, if the other corporate categories are not buying U.S. Treasuries heavily in 2019 after being the biggest buyer in 2018, And then in today's world, like if they don't become the biggest buyer of it now, like they were in 24 and in 23, and other domestic balance sheets are near the limit, this is going to cause demand issues. So the Fed funds over the IOER for months shows a weak bid for U.S. Treasuries all year, and then repo rates start to spike. Basically, what it means is that people do not want to buy U.S. debt. They don't want to buy U.S. Treasuries, and so their prices go down, and the interest rates go up. That's where the Fed has to step in. A new buyer of U.S. Treasuries is likely needed, probably will be the Fed. They start small, but then ramp it right up. So going into the pandemic, we already had a crisis of people not wanting to buy U.S. Treasuries. Well, that crisis is continuing now, where people don't want to buy U.S. Treasuries. And that could be why the Fed is stopping quantitative tightening. That explains why these Treasury yields are going right back up. And that also is going to lead to a really big problem for the United States if they don't get people buying these. Because if you don't get foreigners to buy them, if you don't get other investors and corporations to buy them, well, then the debt gets more expensive, and we go from adding $1 trillion every 3 months to $1 trillion every month. And before you know it, the United States national debt is at $100 trillion. And nobody buys our debt anymore, and the country crumbles. It's an end to the entire country. Now, of course, long before that happens, the Fed steps in, turns on the money printer, and starts buying that. That could be what we're going to be waiting for, guys. It really could be what we'll have to wait for. All right. Now, we're going to take a quick break here with a little public service announcement, and then we'll talk about what went on in the market today with the disaster that we saw. So, take a look here at this. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible. All right, we got to talk a little bit about some of the disaster that occurred in the market today. Don't worry, time to wake up and see your question. I will get to your question. But let's see. From today's disaster, we want to check this out here. Sonic had put this out about the problems with Balancer. At approximately 3:45 a.m., November 3rd, 2025, Sonic security team was notified of suspicious activity involving potential exploit on the BeatsFi protocol. As a precautionary measure, the team deployed a safety mechanism planned to be implemented in the upcoming network upgrade. The following wallets have been frozen pending further investigation. We will be in close coordination with the Beats team moving forward. So we just found out something here over on Sonic that we didn't know that they could do. They apparently have the power to freeze your funds. Well, I didn't know that they could do that. And a lot of other people didn't know that they could do that. Now, it's good in the sense that, like, the scammer, the hacker, is not going to get away with their crime. But it's also, there's a bad sense here in this, like, well, Sonic's not real DeFi then if they can just freeze your funds. If they have the ability to do that. Now, I can appreciate them using it in the right circumstances here when there is a legitimate problem on the chain. I can appreciate that here. But, just because we got good people running Sonic right now, does that mean, that we're always going to have good people that aren't going to pull any shenanigans? So, when I look at that here, I go, oh man, this is going to be a real big talking point against Sonic. And it's going to invalidate a lot of the arguments that have typically been made in favor of it. Because I remember when Sonic, when they brought in Andre and Michael Kong and all them, they wanted to say, well, we're going to be the DeFi chain. 100% we want to be the DeFi chain. Well, you can't really make that argument now if you're able to freeze people's funds. Still like Sonic here. I'm not a hater by any stretch of the imagination. But I think this price is justified when something like that happens. And also, if you had this exploit in the first place right here, that tells me that either somebody was asleep at the wheel or there was a flaw in their system to begin with. Because you don't see problems like this in other decentralized chains. So this isn't a hate on Sonic here or anything, but it doesn't look good for them. And their price is definitely suffering dramatically because of it, which pains to say, pains me to look at it. All right, now talk about some more reasoning here as far as like why is the market sucking so bad today? Like what is really kind of keeping its teeth kicked in here and everything? Let's see. I got to pull up my notes here for that because it's all related to that Fed net liquidity that keeps going down. We got to understand what the repo market is and how it's a liquidity problem at the Fed. Think of like the repo market as like a pawn shop for banks. Like if you were really poor and you were behind on your bills, what you'd do is you would take something valuable like one of your guitars down to the pawn shop, give it to them for, $50, and you pay your bills with the $50, and then hopefully you get the $50 back to go get your guitar back before somebody else buys it. Yeah. Ask me how I know that. I've been that poor before, yes. So that's kind of what the repo market is. So banks and financial institutions, and when they need short-term cash to settle trades or to meet margin requirements or move money around, they go to the repo market. They do a repurchase agreement, means they'll temporarily sell securities, specifically U.S. Treasuries, to someone now and agree to buy them back later, typically for a slight premium. It's like a collateralized short-term borrowing, and the collateral is a U.S. Treasury. The reverse repo is the flip side. Someone gives cash now and then takes securities with the agreement to reverse later. This system is part of the plumbing that keeps interbank markets running smoothly. If repos are easy and cheap, well, then financial institutions can get the cash they need quickly. And if repo rates or if they go up or access becomes constrained, well, that means it's harder and more expensive to borrow cash short term. It's basically like you want to go down to the pawn shop with your guitar, and they say, well, all I can give you right now is $25 for it. That can ripple throughout the rest of the financial system. So what's going on right now is that quantitative tightening that should have been stopped at the last meeting they did, but they didn't. They said, oh, we're going to wait until December 1st to stop it. What is the damn benefit of waiting until December 1st? Anybody, that was a question that the idiots in the press corps should have asked. Because they didn't want to ask that question. They asked a bunch of other stupid questions, but they didn't ask, hey, why are you waiting until December 1st to stop quantitative tightening? I mean, we see some stresses in the repo markets right here. Why don't you stop it right now? So, years after the pandemic, the Fed expanded the balance sheet, which pumped liquidity back into the banking system, but then inflation rose, so the Fed had to unwind and reduce some of those holdings, suck money out of the system, out of the economy. That's when they let the securities on their balance sheet mature. And that reduces the amount of excess reserves in the system, or the amount of money that is circulating around the economy. So banks have less free cash sitting at the Fed. Less cash means less cushion or absorption. If you're jumping off of a rooftop and you land on a couple of mattresses stacked on top of each other, you may not feel any impact at all, or any negative impact, any pain at all. But if we start taking those cushions away, you start to feel a little bit more pain as the stack of cushions gets closer to the ground and your jump gets higher. So as there's less access cash less excess cash, there's more sensitivity to changes in demand for that cash. Yeah, the Treasury General account is also a problem right now. And this is what I think is probably one of the biggest problems that we're facing. So let me bring it up here on Fred. Where do we got it here? Let's see, that's weekly average. Is this what we want to look at? Yeah, this is what we want to look at here. Okay. So if you take a look at this here, it was all the way down here in July, down to about 300 billion. Now it is more than tripled that. I mean, it just says 957 billion here. Bear in mind, that's as of Wednesday, October 29th. It could absolutely be higher than that. It could be at $1 trillion now. Remember, this is money that is just sitting in cash, not invested in anything. Because it's not invested in anything, it is not pushing things up in the market. It's really just money sitting on the sidelines. Kind of like, that thing that's going around Twitter right now where they keep showing all these cash and money markets that's just sitting on the sidelines. Well, this is like that here too. And that's bad. We don't want money sitting on the sidelines. We need it deployed. We need it deployed here. And when it does get fully deployed, that's where you see some very powerful spikes up in risk on assets. So the problem that we're facing here with this is that because the government is shut down, this money is not getting spent. It's just sitting there accumulating. Now, this money itself is not going to go directly into crypto. It's going to go into other assets, and that will push money out of those other assets that will eventually go into crypto. But when it refills, what happens is the Treasury is issuing debt to raise cash, or it's collecting tariffs, and then it's held in that account instead of circulating throughout banking and money markets. So that's pulling money out of the economy when that happens. It's like the government taking some cash out of circulation and holding it. Banks are also drawing on a lot of the Federal Reserve lending tools because cash is tight, access to cash is tight. Financial institutions and banks are using backup facilities such as the Standing Repo Facility, or SRF, to borrow short-term when repo rates go too high or there's just not enough cash available in the free market. That indicates that liquidity is under strain. It's pinched. Declining bank reserves are a problem right now because when you have bank reserves and at the Fed declining from their pandemic-era peaks, well, that tells you that there's just not a lot of money to go around. That's the real problem. There's not a lot of money to go around because Fed net liquidity is going down. Lower reserves means that any sudden demand for cash, like settlement, tax payments, hedging, margin requests, that could lead to spikes in short-term interest rates, and that could force institutions to scramble for money, which increases the funding stress. So repo rates go up and the Fed responds. The repo rates go up. That's like an indicator that the system's under pressure. The Fed has responded with some injections of overnight repos, but really none of it is enough to really matter to make anything feel better. So it's a sign that the Fed sees stress in the short-term funding markets and is acting on trying to avoid blowups in the plumbing. If there's a blowup in the plumbing, you get an emergency meeting at the Federal Reserve. So I don't really want to hope for bad things to happen, but I do want an emergency meeting at the Federal Reserve to occur because they have screwed up the markets so much. Now, does this explain why crypto is performing poorly? I think it does, because you got a risk-on asset, a speculative asset, compared to traditional safe assets like treasuries and cash. And when liquidity is abundant, we have low interest rates on cash at the bank. What do you do when you got low interest on cash at the bank? Well, you take your money out of the bank and you invest it in something. When liquidity gets tight, though, risk assets often suffer first because investors demand higher return for risk. And if they're not getting a return for risk that's that much higher than what they could get in a treasury or in a savings account, they're not going to take on risk. Also, talk about the TGA. If the treasury rebuilds its cash buffer, the TGA, that means less cash is in the banking and money market system for things like margin, leverage financing, or speculative trading. And that drain can reduce buying pressure on all risk assets, including crypto. And that could raise borrowing costs for those trading crypto derivatives or leverage positions. The higher funding and borrowing costs, that will also occur as well. If you want to borrow money, it costs a lot more now. Repo rates and general short-term financing costs are going up. And that includes margin financing, derivatives collateral costs. Stable coin issuers needing short-term liquidity, their costs have gone up now. Those increased costs can squeeze crypto trading desks and reduce leverage, reduce flows into crypto. And then also, like, the sentiment is just going to be negative in all of that. All around, it creates like a very negative sentiment. So all of this uncertainty about what the Fed is going to do, these are big problems for crypto. Uncertainty about what the Supreme Court's going to do, not just with Lisa Cook, but coming up in 2 days, oral arguments begin on the tariffs. The tariff case is going to be getting oral arguments coming up on November the 5th. A lot of uncertainty around that. That could go good for the president, could go really bad. And I don't know which way it goes. And I think either way which it goes here, it will end up being a catalyst for either a money printer getting turned back on or a catalyst for good news for the markets. I mean, particularly the stock market. Probably do a dive on that one there. Because those, the tariffs, like if they do get ruled unconstitutional, well, that's not just a real problem for Trump. That's a real problem for the United States and like the entire funding of the government. And well, I did find out that's kind of good news on that, though, is that even if they rule them unconstitutional, that doesn't necessarily mean they're all going to have to be refunded right back to where they came from. It'd just be in increments, like some would have to get refunded, not all of them. All right, so let's take a look at some questions that we got here from everybody. I hope that nobody thinks that, like, oh, Cairo's gone bearish now. I'm not bearish. Still not bearish on anything. But I do think that Q4 is going to suck a lot worse than I thought it was going to. And Q1 could really suck as well. Mr. Barbarian asks, what are your thoughts on Zcash? Well, let's pull it up here. I know that it's had an incredible run lately. Let's see, what do I think about it? All right. So, still a long ways away from its top, but that's because, like, this was, it was launched 10/28/2016. And then, like, even back in that first cycle, it really suffered. Like, oh man, I hate when CoinMarketCap does this. Won't let me zoom in on anything. All right, and then it had gone up to 388. Oh, it reached the top at 700 in 2018 during that altcoin season. Been struggling ever since. Didn't really do anything. Didn't do much of anything in the last bull run here. Just kind of like went up to where it was. I'm rooting for it because I'm rooting for all crypto here. It's interesting that this one's having a standout right now. Anybody got any reasons why it's doing that? Ambitious plans amidst... Okay, it reveals ambitious plans. What are those ambitious plans that it's revealing here? Let's see. The firm behind Zcash and the Zashi wallet has released a roadmap. All right. Focuses on reducing tech debt, improving privacy, and dev fund security. Okay, that's good. I like to hear all of that. Privacy features. Okay. Yeah. I think privacy is in right now because if we looked at Monero, we might see like some similar goodness behind it. Is that the case here? Well, sort of. Yep. Looks better than it did before. Looks like one of the few things that's actually up, especially on the year here. Yeah. Privacy is in right now. That's the story. And why that is, I don't know exactly. But I mean, it could be like all this talk of capital controls throughout the rest of the world, particularly in France. Maybe it is all related to France. We'll see about that. That's what I think of Zcash. All right. Other questions we got here. Here we go. There's another one. Time to Wake Up asks, what do you think this means for the Pulse ecosystem or Total 3 in general? I'll tell you what I think it means. Is Q4 is going to suck, and it's going to keep sucking. It's going to suck worse than I even thought it was going to suck. Q1 is going to suck. And I don't know about Q2 next year, but I don't have high hopes for it if we don't get Lisa Cook out. She has to go for me to feel good about anything for Q2 of 2026. Yeah, it is way too early to call any of that stuff right now. Way too early to start talking about Q3 and Q2 of 2026. But what has to reverse here is that Fed net liquidity has got to change course. If this doesn't change course, it could be the end of not just this bull market. It could be the end of crypto. Not just the end of this cycle. It could be absolutely the end of crypto. Because if this keeps going down, it will keep dragging crypto down with it. And if you keep dragging crypto for a long time with it, you're going to wash a lot of people out. And a lot of people are already at some pretty gross losses right now. You know, the anger you see on X, it is justified. And it's in every community, not just ours. Every community has it. And it's because a lot of people are sitting on some nasty, unrealized losses. If this trend continues here, those losses will never come back. And why I say that could be the end of crypto? If Ethereum is only going to ever have a 2% gain after 5 years, that's all it's made on top of its previous highs, 2% after 2% higher than its previous cycle high. If that's the best that it's going to do for 5 years, well, nobody will ever invest in it ever again. Why would you? And if the number one altcoin has that problem, nobody's going to invest in any other altcoin. So if this doesn't change, this not only threatens the cycle we're in, it threatens all of crypto. 100% threatens it. Now, I'm not worried about this continuing to go so low that it destroys all of crypto. I bring that up here to just show you how serious this is here. But what you do got to bear in mind is that the lower this goes, the lower it drags crypto with it. And the longer that crypto goes lower, the longer it will take to get back. Because a lot of people are going to be hurt from this. And they're going to have very unfavorable opinions of the market for a long time. So we can't have another month of this trend continuing. It looked like it was about to reverse course here in late September, and that's why, or actually this was October 5th. So that's why we got the cycle high, or not the cycle high, but the new all-time high. That's why we got it on October 6th, because it looked like the day before that Fed net liquidity had reversed course. That's why it's been sucking ever since then, because it's gone nowhere. It's done nothing but plunge down ever since then. And it's not to say that it's a perfect correlation. It's definitely not a perfect correlation between Fed net liquidity and crypto. We can see that here. But when you're doing this here, when you're pushing the trend down, and now the trend, it's trended down lower than it was on, when was this here? Bottom of the bear market of 2022. Pretty close to the bottom. December, this was Christmas of 2022. It was that low. The only other time that it was that low, October 25th or November the 1st of 2020. Where was Bitcoin then? Don't think it was in a great spot back then. Let's have a look here. Yeah, do it like this here because they won't let me zoom in. Yeah, it was starting to go up on its uptrend right here, but this up that it was going, it was just regaining a lot that it had lost. 13,550. Which, man, you can already assume. Okay, it does let me zoom in now. You can already assume here, like, that is not where a lot of people wanted it to be by then. It was not looking great for Bitcoin back then there. Now, as the Fed net liquidity started climbing up, which it did, it brought Bitcoin up here with it. And then we started to have a really good year the following year. Hopefully, that's the case here too. I will feel a lot better about these things. We'll feel a lot better about all of this when crypto starts, when this Fed net liquidity starts doing better. Because if it goes down here below 5 trillion, then oh man, I hate to even think about what that looks like. So how much it has like a long way to go here before, and it has a good $500 billion of breathing room here. Hopefully, I mean, when they stop QT in a month, hopefully it is still above 5 trillion. That's what I think is going to be going on with the totals and also the Pulse ecosystem. The Pulse ecosystem is not immune to the liquidity situation. All right. Now, what I think is also another existential threat, though, is if Bitcoin falls below 100,000, just because of like what an important psychological milestone that is for a lot of the market. We don't want to see that happen. All right. And actually, here's what I'd say is like, if you're dollar cost averaging in anything right now, a dollar cost average into stable coins and everything, like right now, probably the only thing I would buy is Bitcoin just because of like all the uncertainty out there. But man, if it falls below 100,000, I think it would take a lot of effort, a lot of convincing to get people to say, hey, this thing is not dead. This thing is not over. So, what I say about this right here, this doesn't mean that I think it's all over yet. This doesn't mean I've changed my views on the cycle being, the 4-year cycle never mattered here, and I'll show you why eventually, like why I still firmly believe that it's not happened. I'm saving the one little shred of evidence I've got for that. I'm saving that for when Bitcoin posts a new high. But it would be very catastrophic to Bitcoin and the crypto in general if that Fed net liquidity keeps going down and Bitcoin falls below 100,000. And goodness knows, I don't even want to think about what Ethereum is doing. Like, Ethereum is definitely going to get a big black eye. Get a very nasty black eye. Get all its teeth knocked out if Bitcoin fell below 100,000. And that would just ripple throughout the rest of crypto. So I don't think that happens, though. We got 1 month here before QT stops. Not that QT stopping is going to be a catalyst for it to go up. But what it will do is it will stop the decline on Fed net liquidity, I think. I think it would definitely stop that decline. And then It will still take a long time, though, from that stopping to course reversing on the price charts where our prices are going up now. Still take a long time from QT stopping before that happens because of just the negative sentiment that's got to get washed out and a lot of doubts that have to be overcome. So I'm not bearish, and I'm not changing my thesis on what happens here. But what I am saying is that it will get a lot uglier before then. So when you look at these price charts, there's only one thing I want you to remember to do, and that's this.
Control yourself!
That's all I got to say for today. Gyro out. That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember,